Alphabet Google had a great earnings report today for Q2 of 2023. Alphabet really showed that they are the giant search engine, but they also showed that they have two strategies that are very valuable for the future. My name is Victor. I have an MBA, a lot of business experience, and I do a lot of analysis on companies that I look to invest in buying their shares. I hope you like this video. If you do, please subscribe to my channel. Please give me feedback on both Alphabet as well as my videos, both good and bad. Now, let me tell you more about Alphabet. I scorecard all my stock investments, and I take each investment through a scorecard of 4 questions, followed by a decision whether I want to buy more shares, hold, or sell my shares. The first question, do I want to be part owner in this company and in this industry? Do I believe the management team is operating the company well? Do I think debt is under control and less than 3 times EBITDA? And I want to discount the stock because I want my investment to go up in time. So if I get a low price, I could expect the stock price to go up and I make money. Based on the answers to those questions, I decide whether I want to buy, hold, or sell the stock. The story on Google is quite simple. They came into a space that they perfected. Google search is used around the world. They just create so much revenue. They create so much value for people that are searching for whatever they need. And then they sell those AdWords and they sell them to businesses. So they've proven that that business is valuable to businesses, valuable to consumers, and they are very profitable in that business. But they have 2 businesses that are going to grow in the future. The first is cloud. Their cloud infrastructure business is doing really well. It grew very, very well. They're already profitable in this business. So that's going to be a growth engine for the company. So that was very good news in Q2. Second, they have a very good AI strategy. It's not fluff. It's not just a bunch of, words. It is a real strategy. And they already have their AI engine in display. I've been using it for several months. So they have a very solid strategy in that front as well. So for that reason, I love the Alphabet story, and I'm glad I'm an investor in the company. The revenues for Alphabet are really doing well. They're a gigantic company, and they were able to grow their revenue by 9%. And so that's just a great job by the team. They also grew their operating margins. So they grew their top line and they grew their profitability. They exceeded expectations with a very good earnings per share number. If you look at the last 4 years, they've grown the company over 107%. And this is a massive company going from 136 billion up to $282 billion in overall revenue. The earnings per share number was a solid beat. They had an earnings per share of $1.44 in the quarter. Their historic PE is 27. In my valuation, I'm going to go to 30. This is a quality company. This is a leader. So I am going to value them based on a 30 PE using the updated earnings per share that's expected for the year. Their balance sheet's in great shape. Starting off with their debt to EBITDA is almost 0.2. It's just ridiculously low. They have $118 billion of cash and marketable securities. They have only $13.7 billion of debt. So they could pay that, they could pay off all their debt and still have over $100 billion in cash. They could pay off all their liabilities, every single liability off of the cash on the balance sheet. This is just an A+ balance sheet. There's no if and buts about it. Just an awesome balance sheet. Statement of cash flows looks great. For the quarter ended 2023, the operating cash flows looked great. They went up almost $10 billion in that quarter. Their first half cash flows from operations went up about $8 billion. Their purchases of property and equipment actually went down year over year, which is a positive because that means their free cash flow is just that much more. In fact, their free cash flows went up 40%, going from 27.9 billion up to $38 billion. Incredible. I'm going to value Alphabet using the free cash flow discount method as well as the earnings per share discounted method. Let's start with the free cash flow method. I've taken 2022, and as mentioned, they are just having a great year. I'm going to be conservative and take 2022 and add $7 billion to it. That's a good conservative starting point. They're likely to exceed that number, but I want to play it safe. I'm going to grow from $67 billion at 8% for the first 3 years. And then after that, the growth rate is going to be 4%. Nice, consistent, and conservative numbers. These are all the cash flows I expect the company is going to produce in the future. They're going to produce more than $2 trillion of free cash flow in the distant future. So this combination of free cash flows, I'm going to discount what the present value is of all possible cash flows in the future. I'm going to discount it by 7.5%, which will be my discount rate, an exceptional balance sheet. So I want a reasonable discount rate for an exceptional company. If I discount all those free cash flows, I get to a value of those free cash flows of $1.997 trillion. I'm going to add the cash on the balance sheet of 118 billion and take away the debt, which is 13.7 billion. And I get to the value of the company of $2.1 trillion is what I believe, based on the free cash flow method, discounting those free cash flows, the company is worth. The company market cap currently is $1.55 trillion. So in effect, there's a 28% discount on Alphabet Google stock currently using the free cash flow method. The earnings per share method, we're going to start with earnings per share that I expect the company is going to produce this year, which is $5.50 per share. I'm going to use a PE of 30. They historically have been around 27, 28. But given that this company has really shown they have momentum, I'm increasing it to 30. And I'm going to grow that by 8%. Based on those entries, my earnings per share method valuation for this stock is $179 per share. They're trading at $129 per share. So the earnings per share method offers up a 39% discount. I'm going to blend these two numbers. I give more weight to the free cash flow method. And I take two parts of this method, one part of this method, and I get to a discount of 31% available on Alphabet Google currently. The stock price this year to date, it's up 36.89%. And Alphabet Google hasn't gone up like NVIDIA, Microsoft, and that's a good thing for an investor. There's not a lot of hype in this stock. And I believe that they really delivered this quarter. They've shown they're a leader. They've shown they have momentum. And I think now this stock can potentially run up because they've been hovering around the same stock price for, let's call it a month and a half. But now with this quarter, the stock is up, almost 6% in after hours trading. But I think it could be the beginning of a nice rise over the next month or two. All right, so let me scorecard Alphabet Google. Do I want to be a owner of this company? Yes. And I want to be a part of this industry. The management team is exceptional, doing a great job. Debt really doesn't exist on their balance sheet. They have an A+ balance sheet, and there's a discount available on this stock currently. So I'm buying more shares of Google stock. Thank you so much for watching the video. I hope you found it interesting and maybe learned a thing or two about Alphabet. Keep in mind, everything that I do is for entertainment and educational purposes. I'm not recommending you buy Google stock or sell it. I hope you found this video interesting. Please consider subscribing to my channel if you like content like this, and leave some comments. I'd love to collaborate and get your thoughts on what you think about Google. And please share feedback on my videos, good or bad. Thanks again for watching. Good luck investing in 2023.